All right, it's 1 o'clock. Welcome to the marketplace. Coming up this afternoon, Finance Minister Dr. Kansela Tuforsen expected to present the 2025 budget review to Parliament tomorrow without introducing new taxes or increasing existing rates. Also coming up, Bank of Ghana signals potential shift in its policy rate ahead of the upcoming Monetary Policy Committee meeting at the end of this month. We've got insights and analysis coming up. Don't go anywhere. And thanks for staying, everyone. In our first story, Finance Minister Dr. Kansela Tuforsen is expected to present the 2025 mid-year budget review to Parliament tomorrow, Thursday, without introducing new taxes or increasing existing tax rates. This information comes from sources familiar with the upcoming presentation. Here's more.
We understand that the Finance Minister will rather highlight some of the ongoing measures aimed at helping government achieve the in revenue at the end of this year. This will include current reforms that is expected to improve collections and deal with some administration challenges facing Ghana. The Finance Minister...
All right, we've got issues with the audio there. We'll fix that and get that story right back to you. But the Bank of Ghana is signaling a potential shift in its policy rate ahead of the upcoming Monetary Policy Committee meeting at the end of this month. This follows a significant reduction in rates for its short-term bills, which dropped from 27% to around 13%. George Jaffe has more.
Bank of Ghana earlier this year rolled out its own bills to try and mop up what it describes as excess liquidity on the market. This was after the Ministry of Finance tried to cut its Treasury bills rate by some significant margin to currently hovering at around 13% for 91-day bills. The Bank of Ghana believes that it has been able to use its short-term bills to check liquidity on the market. Even as early as 7th of July this month, the Bank of Ghana did quote 27% as interest on rates for its bills. However, at its last auction carried out on Monday, the Bank of Ghana is looking at a rate of between 11 to 13%. So if the Bank of Ghana bills use the policy rate as a guide, and that has gone down by some significant levels, then your guess is as good as mine about what to expect. But the critical question here is that does the current data on liquidity on the market and threats to inflation going up support a significant cut in the policy rate come July 30, 2025? Well, that could be described as a $1 trillion question.
All right, joining me on Zoom, Williams Prepare, Associate Professor of Finance at the Andrews University in the U.S. on this story and the mid-year budget review. Thank you so much for joining us. Let's start with the mid-year budget review. What economic factors might be influencing the Finance Minister's decision not to introduce new taxes or raise existing rates in the budget?
Good afternoon to you, Daryl, and good afternoon to you, our viewers. The first thing I've seen is that possibly the Finance Minister is looking at how do we sustain the current gains that they have in the last 6 months, specifically ensuring growth and stability. There is a feeling that if new taxes are introduced, it's going to distort the the economy, and then especially businesses are going to start to complain. And the second aspect is that there is a desire to use this approach to get investors to look at Ghana. And then the third aspect is that they want to also boost consumption. So in that case, it's better not to introduce new taxes. The more taxes are introduced, it finds its way to reduce the payment. There's something called the Laffer curve. There's a point that taxes becomes a disincentive. So you have to find a way to be able to sustain the collections than rather to worsen it. So this is what I think that is informing that decision. And then the last aspect is that because the government is also enjoying some goodwill from Ghanaians in terms of its policies, it is better not to bring some backlash if you introduce new taxes. So that these are some of the reasons why I may think that the finance minister and his team may say, "Hey, let's be on autopilot as we are till this year."
Could this have an impact on revenue or public services in the short or long term?
So, indeed, in the short term, the implication is that would an increase or no introduction of taxes, are we going to be able to sustain with the current revenue generation that we are? Probably they might have looked at their expenditure patterns and say, yes, this is going to help us, specifically with debt servicing. Would we have enough revenue to pay for the debt service, which is a huge burden on government? And then if you've noticed, government has been able to also find a way to sustain the pressure from labor in increasing wages, which is the two items are the major elements in government expenditure line items. So if they are able to do that, then we may not see a significant impact in the short term. In the long term, no taxes coming in could boost, as I mentioned, could boost investment activities. What the government needs to do is to increase their collection. So I think the GRA also said they are going to focus on compliance. And he mentioned that they were going to be more friendly in collecting taxes. If they're able to go on that aspect, this approach will help. And then we may see businesses growing. Businesses have been complaining. However, the last businesses investors' confidence in Ghana showed a positive trend. And then the final angle is that if things work as we are seeing in the long term, employment may rise, unemployment may reduce, and that is the ultimate aim of every government, to create employment. So this is what I see that probably they are trying to ensure that the public service and then other sectors don't suffer too much with an introduction. Let's also note that this is a media budget, and mostly media budgets. Government normally don't make significant policy changes, but maybe corrections.
Yeah, we have been reporting also this afternoon that the Bank of Ghana is signaling a potential shift in its policy rate ahead of the upcoming Monetary Policy Committee meeting at the end of this month, following significant reduction in the rates for its short-term bills, which dropped to 27% from 27% to 13%, I should say. What are the potential implications?
So, Daryl, within the last 2 years, because of our debt situation, we have had an inverse yield curve, whereby short-term securities were having higher rates and longer-term securities were having shorter rates. This is abnormal. And within 6 months, we've seen the Bank of Ghana has used its monetary policy tool, especially the open market operation, to correct the yield curve. And this is the time that they think that, yes, indeed, the correction has really happened. Probably they have also looked at their money supply in the system, which is, we call it the M2, and they think that the money in circulation is enough. It's not going to cause major inflationary pressures. The aim to have a higher yield curve in short term is to be able to mobilize excess liquidity in the system. And I'm sure they've noticed that, yes, they have achieved it. One of the signals you see this being achieved is when you see your inflation rate dropping. And we've seen the inflation rate drop significantly. So it is in line that the Bank of Ghana, using their money market operation, dropping their yield curve. And this is what I'm expecting, that when we say the normal yield curve, longer periods will have higher yields, and shorter periods will have shorter, smaller yields. And this is what we have seen. So in the positive side is that it's going to stimulate borrowing and spending. So this policy is also in line with the finance minister decision not to increase taxes. So the two are singing, singing the same song, or they are coordinating very well to ensure expansionary economy in Ghana. So that is the ultimate aim. So as you lower interest rate, businesses will be able to borrow at a cheaper rate, employ more, expand their businesses. So this is what we are seeing, and this is the correction. And so indeed, this is a full correction, seeing that inflation rate has really dropped.
And how might a possible shift affect borrowing costs?
Indeed, it's very significant. If you have a loan which is on a variable rate or term, a reduction in the borrowing cost is going to bring your debt servicing very low. And businesses will like this. Businesses who also want to expand, this is the time that probably they will get loans cheaper. The anticipation is that as businesses expand, they will be able to create more employment. And then also the non-performing loans is also going to reduce, because the cost of funds has become cheaper in the long term. So a lower shift, this is a positive side. Also, consumers, based on that, may now have the purchasing power to spend more. And in that way, we will see growth, and Ghanaians will be happy. The ultimate aim is that the citizen, or the one walking on the street, to say cost of funds is cheaper now. Whatever little my income is, I have a higher purchasing power to be able to spend on the goods that I want. And my advice is that also, as loans are going to be cheaper, we should not just decide to borrow. We must borrow for a purpose. So these are some of the factors that I think that we may have to consider. It's a good sign that we are seeing. Just that the government must still have to be very careful and make sure that things does not go out of place. They must stay on track and make sure that between the monetary policy, the fiscal side, and then the monetary policy side, both governor and then finance minister work assiduously at whatever they are doing and the strategies to ensure that Ghanaians are happy. And this is what we all need. The last part, as you see interest rate being cut, it's also in line, in theory, in line with exchange rates, and you see the lowering of the exchange rate. That is why our currency is appreciating, and these are some of the factors. If you've seen, that's your we call it interest rate parity, and these are some of the theories behind the concepts what we are seeing. So, in my perspective, I'm really seeing both finance minister and Bank of Ghana governor being proactive in taking decisions to affect the future, and they are using textbook approach. Anyone who is both in economics and finance and reading and seeing what is happening
Okay.
are the things that we teach in business schools and economic schools.
All right. Thank you so much, Associate Professor of Finance at the Andrews University, Williams Prepper. Thank you for joining us on The Marketplace. You're watching The Marketplace. We're taking a short break. When we come back, let's talk tech. Don't go anywhere. Welcome back. Let's talk tech. Move, an African fintech specializing in vehicle financing for ride-hailing and delivery drivers, has secured $100 million in a series of B funding round led by Uber, marking Uber's first investment on the African continent as the company prepares to expand into new markets. Joining me on Zoom is lead for Eyes of Africa, Henry Kobler. Great to have you back, Henry, on Let's Talk Tech. Let's begin with what this investment by Uber in Move signals about the future of mobility fintech in Africa and other emerging markets.
Thank you very much, Darryl. So the investment is a clear reflection of the growth and the confidence in the fintech and mobility sector in Ghana and in West Africa as well. And I think really in the whole of Africa as well, because already Move is already in 13 markets, which is a big deal for what they're doing. And I guess that for Uber to look into the data and look at how the operations of Move comes into play and to be putting in that amount of money is a bigger investment, which comes to restore some level of confidence in the market when it gets down to the mobility and fintech industry in Ghana and in Africa as in itself.
Well, how sustainable is Move's vehicle financing model, especially in economies like the one we have here in Ghana, where, of course, we're having challenges?
I mean, yes, Move really wouldn't get that kind of investment if Uber is not having some level of data. I mean, most of the financed mobility equipment that are sitting on Uber and Bolt and all of that, they sort of have that quantum of data that they sort of work with to know that it's a very good investment and it's a profitable fintech company to put in that level of money on. I think that for me, it gives some level of validation. I mean, they are almost about $750 million in terms of valuation, which is a very good one. We're looking at some level of mobility as a service trend in Africa, and I think that this gives us some level of direction. The government of the day really had looked at how we're going to improve EV use of vehicles in the country. And I'm thinking that that also helps in terms of this whole climate change and EV being able to help with the climate issues which we're having. Again, I am also seeing that it's also going to give some level of youth and employment in this region getting to be a bit better. Creation of some of these jobs comes into play, and it's sort of easy. I'm looking at how we're going to position regulation to be able to accommodate this kind of service, fintech and mobility coming into play, and also giving some level of ecosystem opportunity for us. For me, I think that we should just be policy ready, infrastructure ready. Some of the very terrible roads which we're having, which could really cost a lot if you have to lease some of these vehicles or EV vehicles to people to be using that service, and they are sort of always in the workshops. I think that that comes to be a bit of a challenge. And so urban infrastructure readiness, policy readiness is sort of required. And I'm looking at it as, since they are also in almost about 13 markets, it's actually a very good opportunity for us to be doing Pan-African expansion in terms of the fintech platforms and being able to move funding along these regions.
Well, let's talk a bit more about the technical and operational challenges. For instance, if they want to scale scaling up the use of EVs or CNG cars that use natural gas, that might be challenging.
I don't think so. I mean, that's the reason for the funding. They are providing the mobility, accessibility coming into play. My worry really is the infrastructure that's also going to be available to be taking care of some of these vehicles and the infrastructure that is in place. I mean, I see a lot of very terrible roads, and that comes into cost. If you're listening to the conversations when it has to do with fuel and spare parts, it's usually the part that plays a lot in pricing, and that could also affect the whole ecosystem in itself. And so I think that, like number one, I had said, we should be looking at policy readiness. I mean, making sure that that trend is not cut off, just like it did with Twitter, where a bigger company comes into play, starts to employ a lot of people, and then it gets to be cut off short based on the parameters that are not set right within our region in itself as looks to policy. and again, infrastructure as well. But I think that moving from gas to EV cars wouldn't really be a challenge. I've seen quite a number of startups coming providing that kind of service, and I think that it's a one in a good direction. The government really also is looking into providing some level of support, and I think that if it's done right, we should be in the good books.
Yeah, I want to take a look at market dynamics and competition as well. So I was reading that Move has partnerships with BoG, and now is doing this with Uber as well. How does it play in market dynamics and competition?
For me, I think that it's just a matter of data sharing between these platforms. I think that the platform is not just for one person. I mean, Move is sort of not sitting on just Uber. They are also sitting on both, and potentially they'll be sitting on quite a number of ride-hailing services, because that's the service they're sort of providing. And so far as they are leasing cars and having some level of partnerships, I'm sure that there are a lot of legalities that come into play, and that is where policy comes to protect the citizenry that will be jumping in there. But again, also, I'm sure that before getting into some of these moves, these bigger companies sort of have their hands on deck when it comes down to the legal and regulatory requirements and market dynamics that would play out on here. I'm sure that they would figure it out. It's not really going to be a problem because this is part of innovation. At some point, innovation has to be on that spread to every platform that comes.
Yeah, last question. We've got a minute. You speak a lot about data. So I just want to find out what role data and AI-driven credit scoring, how those play in Move's financing approach.
Yes, I think that it's really going to play a very good role. I'm sure that the data that already sits with Uber and BoG as regards Move being on them is what is sort of forming that kind of investment coming in the first place. And so to be able to get at, I mean, credit scoring is something that we're getting to start reflecting on here in Ghana. And already we're having AI being able to aid in terms of allocation of rights to the people that are on mobility services and being able to give them some level of priority. There can be some level of bias, but again, so far as that service provides access in terms of what it needs to provide and being sure that that service is in play in the books, I'm sure that we could be having a good time in Ghana. But I think that regulatory comes in how this gets to be playing out in equal terms for everybody that sits on the platforms.
Thank you so much, Henry Kobler. Good to see you once again. We'll speak sometime later. And that's the marketplace, everyone. More news on our website, myjoyonline.com/business. Head there for the day's latest stories. There you go, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We'll see you same time tomorrow.